This is From Day One. And welcome to the webinar, Pay with a Shared Purpose, providing employees with the financial benefits to help them get ahead. Feeling financially secure is essential to feeling genuinely included, but it's easy for HR and DEI leaders to overlook the need to align employee benefits with their commitment to inclusion. When benefits do not take into account principles of inclusivity, they can miss the mark on creating financial wellness for employees. When workers are stressed out about money, their lives suffer, and so does their performance, their productivity. In an era of financial inequality and incredible recent instability, employers can be part of the solution. They can provide workers the tools to achieve financial wellness through budgeting, planning, the bill paying process, and other ways that help them make the most of their paychecks. This session is hosted by us, the From Day One editorial team, with support from Even. I'm gonna tell you a little bit about Even. Even's responsible on-demand pay platform helps employers do right by their employees, to build goodwill, and to achieve long-term financial wellness together. Even's mission is to help companies reimagine the way they pay so people can live the lives that they want, and are excited to partner with a company like From Day One to bring this mission to life, that's us, with passionate HR leaders. So now for a few quick logistical items. This webinar is being recorded. It'll be available on demand within 24 hours after the event, so look out for an email about 24 hours from now with the link. That email will also have info on SHRM or SHRM credit for this session. Also look out for a written account of the conversation next week at some point on our website. That's fromday1.co, FROMDAYONE.co. In about an hour, that's 3 p.m. on the East Coast, we will have a Q&A session. You can submit your questions at any time, including right now, using the Q&A button that's on the bottom of your screen. Now, I'd like to introduce our moderator, business journalist Lydia Dishman. She reports and edits for Fast Company on tech and leadership. She's written for CBS Money Watch, Fortune, the New York Times, among many, many others. And she's a frequent moderator here at From Day One as well. Thanks so much, Lydia, and over to you.
Thank you, Nick, and thank you to everyone who's joining us today. We can't see you, but we feel your presence, and we have a stellar lineup of panelists to discuss this very important and very timely topic. So without further ado, I'd like to have everyone introduce themselves briefly and say what they do. Let's start with Maria.
Thanks, Lydia. My name is Marina Vassilev. I'm a compensation expert. I have spent my career in corporate as well as consulting environments. And currently I'm with an organization called BASF. It's the largest chemical company in the world, and I lead the compensation function for North America.
Maria.
Reis. I am the director of compensation and benefits for LG Electronics. I've been with that company for 2 years. Prior to that, I spent many decades in the retail industry and financial services.
Many decades. You're
like 3 decades.
Suzanne.
Good morning and afternoon, everyone. I'm Suzanne Usaj with Live Nation Entertainment, and I guess it's in the title as an entertainment company. We are the largest in the world, and if you're not familiar with Live Nation, Ticketmaster, House of Blues, and all those brands, and bringing the best of the live experience to you for now in your home, but hopefully always when we can get back together again. And I'm the head of benefits, but what that means for Live Nation specifically beyond insurance and retirement programs is an overall wellness of our employees. And maybe I shouldn't use wellness because that also has a stigma or presumptions within it. It's really important for us to take care of our own, and so I'm responsible for all the programs and the guidance within that.
Thank you. Over to Kilolo.
Hi, I'm Kilolo Kijakazi. I'm an Institute Fellow at the Urban Institute. Security, including retirement security, structural racism, and the racial wealth gap.
Thank you. And last but not least, Jon.
Hi, I'm Jon Schlossberg. I'm the co-founder and CEO of a startup called Even. I'm a behavioral psychologist by training, and in my career, I've been a product designer, working on websites and apps that tens of millions of people have made a part of their daily lives across the world. Super excited to be here today. Even is a platform that helps people escape the paycheck to paycheck cycle and start saving money, often for the first time. And I think this is like a pretty timely thing given what's going on in the world. So thank you all for being on the panel and for being in the audience.
Thank you. So I'm going to jump right in here and have Kilolo sort of set us a little bit of context from your research and analysis perspective. What economic trends are you observing as a result of the pandemic and its attendant furloughs and layoffs?
So the economic trends have worsened as a result of COVID-19, and racial disparities are worsening too. One report showed that unemployment grew more in 3 months of COVID than it did in 2 years of the Great Recession. And while some people are now going back to work, and unemployment has declined for white workers on average, unemployment has increased for Black workers on average. And with the recent surge in COVID, people may become unemployed again. And prior to the pandemic, there were large racial disparities in the labor market. People often attribute this to lower levels of education by Black workers, but that's just not the case. When you compare Black workers and white workers at the same levels of education, what you find is that Black workers have higher rates of unemployment, even when you're looking at Black workers who have a high school degree and white workers who have the same level of degree. Black workers have a higher level of unemployment. When you compare workers with PhDs, Black workers with PhDs have higher levels of unemployment than white workers with PhDs. The same is true in terms of wages. Black workers are paid less at every level of education, and Black workers are typically paid less in every occupation. If employers sincerely want to improve financial stability for workers, they need to eliminate the structural barriers in the labor market, namely racial discrimination in hiring, pay, promotions, and in benefits as well.
Thank you. So I'm going to turn this over now to Jon to also help us set a little bit of context, since your client base, one of whom is Walmart. So that is a very large workforce. So what trends are you seeing based on the employers that are using your platform?
I would say the biggest shift has been in prioritization, because I think, especially now, most executives understand that this is a problem, that the average American worker, especially families of color, are struggling. It's simply a matter of prioritizing that problem with the many other problems that executives are grappling with at their companies. And I think what we've seen since about March is more and more executives, especially in HR, are starting to prioritize financial problems over the others. I think perhaps because they have been thrust into the spotlight, and we're really starting to see firsthand the consequences when people are not prepared for financial shocks. And so part of how that prioritization has sort of manifested itself in our little part of the world is employers are increasing their subsidy of our product. Walmart, for example, used to pay for 25% of the even monthly subscription. Now they pay for 100% of it for all of their workers. And there's more than 570,000 Walmart associates actively using even, and they're using it for free. That's a big deal. Even if the only thing that these Walmart associates got out of the platform was not having to take a payday loan ever again, they're using this platform for free instead of having to take what is very often a loan which can cost upwards of $1,000 by the time it's paid back. So that subsidy, prioritizing the subsidy in the budget, is a big trend that we're seeing. And then prioritizing how the company allocates its resources in adopting a benefit like this. prior to the pandemic, we would have a sales cycle of somewhere between 12 to 15 months. And now we're seeing something more like 4 to 5 months. That's a pretty big difference. And I think it speaks to employers feeling this urgency, again, because the consequences are right in front of us now.
Thank you. So speaking of employers, our other three panelists are at organizations. So I wanted to ask you specifically, each of you, to tell a little bit about how, if your organization has shifted focus, what does that look like in terms of financial benefits for employees? Marina, will you start?
Definitely. Thank you, Lydia. I'm very proud of BASF as my employer, but also a number of other organizations which really took to heart the situation we are in and the situation that many employees are facing, and implemented very quickly benefits and compensation programs to support employees during the pandemic. One of the benefits that's an example, and that was almost immediately implemented in March, April timeframe by many employers, is paid leave for employees who have been infected with COVID-19 or who have a family member who has become sick and they need to take care of that family member. So many organizations came out immediately and offered, up to 14 days paid leave, which was important. Then as the next step, I think as employers, what we were looking for is what are the benefits that we need to offer to ensure employees who still have their jobs can remain productive. And as you know, with the pandemic, a lot of schools and childcare facilities, and pretty much all of them were closed. So employees who need to work on site in a production facility especially became burdened with that, and many employers went back and looked at their backup childcare programs and backup care programs and extended them and increased them to ensure employees can continue working. And then the next level of benefits was really geared towards employees who, in situations where the employer can no longer employ them, right? It's a financial difficulty. We saw that in the automotive industry and a lot of other companies that are suppliers to that industry. They had to put employees on furlough. And of course, it's a very hard decision that executives have to make. And what I'm very proud of is that our government had a program, the CARES Act, which provided financial security through increased unemployment benefits. And in many cases, employers looked at ways to coordinate. So what are the benefits we can offer employees while they're on furlough? And then what are the government benefits that they can receive in terms of unemployment or short-time compensation? And I would say the last thing is then education, similar to what Jon was mentioning with financial education. There were also some provisions in the CARES Act around retirement benefits, loans, withdrawals, etc., making sure that employees have the right financial advice before they make any of those decisions.
Thank you. Yeah, I keep hearing about how important childcare is, particularly for hourly workers, because their shifts change and they don't have this consistent knowing when they're supposed to be at their place of business, and then you have to juggle all the childcare on top of it. So it's been interesting to see how employers are stepping up or not. Suzanne, what about at Live Nation?
Yeah, there's a lot of echoing of what Live Nation did to what Marina shared, but to help share some different perspectives, one of the, specifically to the question about where focus has gone, a lot of times since I'm coming from the benefits world, there's this constant chatter about attracting and retaining talent. And I don't think that's disingenuous, right? It's a lot of parts of insurance and even a retirement program. It's better if you don't use them now, right? It's better if you're healthy and don't need to go to the doctor constantly. It's better if you can save money over the long run. So it's understandable that it's typically that perspective. But I think what Live Nation very quickly shifted to was to look at I did an analysis of our entire benefit program, what I referred to as the taking care of our own. That's anything from what I mentioned already, all the way down to emergency crisis programs, as well as partnering with our diversity and belonging leaders, and really just looked at what do people actually need right now? not what do we need as an employer, but what do people need? And some of that was listening, but obviously we needed to act really quickly. So we did do focus and but gathered some samples of what people expressed was the need, but also looked at the reality of healthcare, for example. So when Marina mentioned the idea of having to turn to furloughs, probably goes without being said, the drastic impact that's hit Live Nation Entertainment. We're living in a zero revenue environment. There is nothing happening at Live Nation right now, but it was extremely important for our CEO to be able to continue paying people regardless of whether or not they were working up until we found out about the CARES Act. And so then once we found out about the idea of government assistance, then helped transition people to that, right? Because there's, in my perspective, 4 aspects to financial wellness. This is my own personal opinion, is you have to focus on how much, and Live Nation can only impact 2 of these. You make money, you spend money, you manage it while you have it, but also, I guess, save comes before managing. And Live Nation can only directly impact by plan design, compensation, making and saving. So we try to look a little bit more on how can we educate or provide resources around spending and managing. So again, focusing really on what employees need as opposed to what an employer for retention or for competitive edge and whatnot might need. So turning the lens back onto our employees and amplifying that even more.
Thank you. Maria, what about at LG?
Very similar to what the other panelists have already shared. I think for us, it was the acceleration in which we turned our focus. So as part of our multi-year strategy, preparedness was always part of it, but things that perhaps may have been on year 3 or year 4 have definitely been accelerated. Things that, you know, I think one of the other panelists said, it's ways to do more with less. And so, you know, we have a tuition reimbursement program today, but is there a way to leverage some of the CARES Act and some of those other things to maybe change its focus to be around student loan debt assistance, right? So what we really did is, it's not that we changed our focus, we just accelerated the research in which we were focusing on those things. So the other thing, again, similar to what the other companies did, what do employees need, right? And so very quickly, I'd say in like the first week or so, we're putting together policies around telecommuting and things like that, because being fair and equitable was, you know, definitely one of the things that are extremely important to us. So, so we've really just accelerated a lot of what was already on our multi-year strategy.
Thank you. I just wanted to drop in a reminder to our audience. If you don't hear me ask a question, please feel free to drop it in the Q&A box, and I'm going to get to it at 3 o'clock. So just that little reminder. So yeah, I want to talk about this idea, because you've all said this in some form or fashion, of what employees need now. And I want to take a little bit of a deeper dive in what that looks like, because, you know, I'm hearing everything just based on my own reporting, everything from we need childcare, you know, where our hair is standing on end, we have, you know, kids that we need to homeschool, in addition to just really basic things like internet connections and computer equipment. Because not everybody really has those things at home. So, so I want to talk about this from a broader trend perspective, as well as, you know, within your organizations, if we can get specific. But first, I'd like to go to Kilolo and see what you're seeing. What do you see as the real urgent needs right now? You're on mute.
Thank you. You were going to do that at least once. So many of the benefits that have been discussed already, I think are important, one of which was financial education. And I think that all of us at every economic level can use some financial education. But research has shown that over the long term, it doesn't move the needle for people who are experience economic insecurity, and that what we need to be aware of is that, as I mentioned before, we need to kind of pinpoint what are the barriers that are keeping people from having livable wages and benefits that will allow them to prepare for crises like these. And then to take action around those barriers so that people can address their immediate needs, but also prepare for the future, have their economic well-being in the future a bit more stable as well.
Well, John, I have to go to you for a counterpoint. You know, being a psychologist and learning about habits, what can you say about that?
I 100% agree with Kilolo. The research does overwhelmingly show that financial education doesn't work to actually change outcomes. That's actually why we've designed the platform the way that we have. There's no financial education in the traditional sense in our app. We help people learn by doing. The app essentially gives them much better information with which they can do what they're already doing, but do it more easily. There's a stigma in our country today that people are struggling with money because they're irresponsible. And that's just not true. In fact, people who are up against the margins because they're not making a lot of money are much better with money than I am. I promise you that, because they have to be. It's just that process is very arduous. It requires a lot of cognitive energy. It's like a second or even third or fourth job if you have kids. And so the point of what we do is we give you much better information in one place that you're already engaging with. More than half of the people who use Even today use it every day. So this is like the place you're going to check your schedule. You see your budget there. You can actually choose what you're putting your money towards there. You're already there. We're giving you the good information. And then we're putting good tools in your hands that are easy to use in that same place so that it's effortless to actually take action with the information. That's our form of education. Again, just to bring the point home, Kilolo's right. Like, the traditional form doesn't work, but this new one does. Like, in the last 4 months alone, since the start of the pandemic, we've actually more than tripled the amount of money that the average Even member has in their bank account to more than $300, which is pretty close to the $400 that the Financial Health Network recommends most people have in emergency savings. And B, is a heck of a lot of money considering most of the folks who sign up to use Even today have never saved money in their entire life. And so that's it's actually a pretty meaningful change. And it's the result of just helping people do what they were already doing, but do it much more easily and with much better information.
I'm not going to let you go quite yet because I know that the platform throws off a lot of data. So what are you seeing in terms of what those needs are? Is it saving that's a priority? I mean, are people scrambling to save more than they have before?
Yeah, this is a thing that honestly, like, internally at Even, we don't even fully grapple with. Is like, because Walmart was our first customer, we actually have, other than the government, the largest data source of any institution in the United States with which we can do actual financial research. And the thing that we're seeing primarily is that people are saving. Like, the number one thing that people say they want that will help them achieve stability is having money in their bank account. Like, I actually really like referring to it as just having money in your bank account, because it's just like normal words that make it much easier to understand why it's good. Like, do you want money in your bank account or not? The answer is overwhelmingly yes. But the reality for people who are living paycheck to paycheck is that they don't have money in their bank account. If you've never lived that life, it's not hard to imagine why it sucks. And that's the thing that people are prioritizing, and it's the thing that we encourage them to prioritize. Once you have that $400,000, $500,000 in your bank account, that gives you this cushion with which you can then focus on your longer term goals, like saving for retirement or paying back your student loans. But if you don't have the foundation of the ability to absorb an extra bill or a loss in income because you get furloughed, it's very hard to think long term. which is why you have people who, you know, are enrolled in 401k because they're enrolled by default, but then they start taking loans against their 401k because they're not in a position to be contributing to retirement because they don't have that cushion yet. So that's where we start, and that's where people say they want to start. Again, like, people are responsible. They know what to do. It's just that doing it is incredibly difficult. So we're just making it easier.
Suzanne, in terms of tools and resources, what are you seeing if your employees are saying this is what we need now?
Yeah, I mean, I'm really grateful that even before I started at Live Nation, it was the most important thing to do for employees was to address upstream financial needs, right? I talked about making money. Live Nation is within industry and market, but also can only give so much cash on the front end. So we're always competitive, but I think the point I'm trying to make is that going upstream also from a benefits perspective means to have plans in place. So as mentioned earlier, tuition assistance, student loan repayment, we do all of these things, right? As many bills as you can remove from the people who need it. That was the most important. And so I guess I should also mention that we focus, and I'll probably talk about this again because it's even more pertinent now, is we focus on the need of an individual. And we don't try to make a judgment call, right? Because there are definitely people that are making six figures that are in a challenged financial position, but we understand and see much more that that trusted advisor maybe doesn't do everything if you aren't trying to remove some of the barriers in the first place. So those guided plans that I mentioned are a pretty massive one. Is having, we've done this for years, our healthcare premiums be based on a percentage of your income. So that was already a tool and resource that was out there, but I guess in a time of pandemic, all these things that are built and there for them already turn into an actual tool or resource for them once they need to use it, or once that bill or whatever would have come up. I think we're heading it off at the pass. But something I'm also really proud of that I personally lead, I'm just one of the single person at the company that actually manages a program that we have that's a crisis support program, is as much as we can and try to do this, the setting aside 401k, paying people's bills by doing these student loan repayments or other programs, inevitably, or just in what the data shows, is you can't catch all of them and you can't catch every situation. So employees always have the open, our culture has created this open conversation where employees come to us and share what their emergency crisis is. And I am then that trusted advisor in the moment to help provide cash. So we do provide cash. There's essentially a fund that we pull from, but then also make sure they know, like, oh, this happened, I think, because, again, benefits, sorry, but you went out of network for this healthcare. Did you realize that you maybe could have done this? So that person, when they're managing their money on a day-to-day basis, to John's point, knows the basics of what they're supposed to be doing, but there are a lot of other things that our wonderful country that provides a lot of individual liberties and freedoms to many people, and is getting better and better over time, still doesn't do a very good job at actually supporting a lot of those freedoms and creating equity across knowledge and whatnot. I guess one last point I'll make, because I get a little excited about a lot of these things, because it does hit a lot of the areas that are truly important for benefits, being able to give and be there for people in times of need, is the general idea that we assume a lot of times everyone goes through public school, not everyone, most people go through public school or private school in the US system because it's compulsory and everyone does need to go through it. When you think about it, there aren't true financial courses, right? There's not a lot of applicable learning to what you're going to do in your day-to-day when you grow up, so to speak. So I think we've tried to remove a lot of the assumptions that everyone's on the same page, and we just make sure that we're meeting people where they need to. So I guess that was a lot to essentially say that emergency assistance is still really important to us, and we make that available with no judgment. But then we, of course, on the flip side, make sure that we are teaching those same people to fish and figuring out individually what got them in that situation and how the programs that we have that they may not have been aware of could help them from here on out.
Thank you. Just going to take a brief pause and invite Nick back in to do our station identification.
Hello, everyone. Just a short reminder to everyone joining our webinar in midstream that we are, from day one, And today we're exploring pay with a shared purpose. Our sponsor today is Even, and as a reminder, you can submit your questions at any time, including now. We will answer as many of them as we can during the Q&A session, which starts in about half an hour. Thanks again, and back to you, Lydia.
Thank you. So same question for both Marina and Maria. So Marina, will you start?
Yeah, definitely. So I think it's very important from a compensation perspective also to provide education to employees at the right time. And particularly what I've noticed during my career is that when employees receive a raise or get a bonus, the focus of the conversation between the employee and the manager needs to shift, not just about that particular pay moment, but to build a bigger understanding around financial awareness and all of the benefits that an organization can offer. Because once the employees have that foundation and they're put in a crisis situation or in a difficult situation, they go back and they are able to kind of pick that knowledge and know how to make the right decision. So one of the things I've always focused in my career is building programs that enhance communication at the time of the compensation event that includes overall also total rewards and benefits education. So we focus in compensation, typically we tend to be very specific around, salary and bonus, etc. But it is the bigger picture, and building that knowledge over time really pays off for employees. And I don't have scientific research to prove that, but I'm pretty sure that, the individuals who did learn about their benefits at the time when they could go back and get the education when they were faced with a crisis, probably did much, much better because that knowledge helped them at that moment in time know who to call, what benefits to activate, and how to make a good decision for themselves and their family.
I'm not going to let you go yet because I did want to drill down deeper and say what specifically are these employees asking for now? Is it a communications thing? Like, are they wanting more communication around what the benefits are and what the compensation packages are, or is it something else that's prioritized for them?
Yeah, I think definitely more communication is something that they're always asking for, but also now in particular related to the pandemic, it will be communication around relevant benefits. And we mentioned backup care and child care. And there could be others such as, the employee assistance programs that a lot of organizations out there offer that help with mental health, etc. So the concept we have at BASF is something called You at BASF, which is, as I mentioned to you, it's a chemical company. So it's a periodic table that lists all of our benefits, and we train employees to make their own chemistry. So, you go to the periodic table and then you decide what are the benefits that are relevant for you. So I think in the times of pandemic, because so much has changed in the environment in our lives, it is important to get educated on a different set of benefits and make a different chemistry for yourself with those different benefits that fit today's environment. And I'm really proud that we have a tool that's so versatile, and it can work depending on the situation. It can always work for employees because they can go back and look at our total package and decide what is relevant at that time and how they can activate it to support themselves and their families.
Thank you for the additional context. Maria, same thing. I'm really curious as to what the employees are asking for now. And I mean, it sounds like each of these organizations, including LG, has some sort of tailored approach to financial benefits. But what say you? What's bubbling up?
So I would say I echo similar to what the other panelists have said. Our employees are asking for transparency and they're asking for communication. And I would say transparency existed even before the COVID crisis. So I joined LG about 2 years ago, and there was some comp changes and structure changes that were put into effect. And not really good education down to the employee level about it. So you heard a lot of what I call water cooler talk on, you know, I didn't know this or I didn't know this. And in the absence of accurate information, people make assumptions. So something that we've been doing since, you know, probably going on 2 years now is really being transparent about our structure, how we arrive at merit increases, how we arrive at levels, how we arrive at bonus targets, etc. We're actually one of the single-digit organizations that pay all the premiums for benefits. And so if you are an employee who's been with the company a while, you forget that. You forget what the value of those benefits are to you because you're not seeing it come out of your paycheck all the time. So we do a lot of education around that. During our year-end comp planning, we do comp statements so that, you know, employees understand why they got what they got. We're looking to actually expand that. A little bit earlier, I talked about, you know, acceleration, what this crisis has done for us. That's one of the things that maybe we're on our 2-year list that have kind of got accelerated to a little bit sooner. Doing a full statement so people understand the value of my benefits is X, my salary is this, my incentive is that, but from a total package, my total package is this. And I think that's something that employees are not sure about because we're not always that transparent about. So, you know, whenever we survey employees, the one thing that they ask for is to be spoken to more, not spoken at. So prior to the pandemic, we were actually going to our various facilities and doing kind of a speaker series, Comp 101 type thing, where we were very transparent with them. And they asked some questions that we knew they were going to ask. And when it wasn't a favorable answer, you know, we gave them the favorable answer. And I think we're trying, in doing so, we've sort of changed that culture to be one of trust and transparency. And I think that has gone a long way for our workforce.
I'm glad that you mentioned transparency because in just anecdotal reporting, I've seen that when pay is made transparent, then inequity tends to go away. So my next question is for you, Kilolo, about what you see as responsibilities of employers to eliminate those systemic barriers to financial inequity. Is transparency a way to do that? Are they required to do that? What do you see?
So I would agree that transparency is really important, and the other panelists have really laid out some exemplary ways of doing this, but I'll just underscore that employers need to, if we're going to get rid of some of these inequities and systemic barriers, then employers need to provide employees with paid leave, as we've heard discussed, and healthcare benefits or assistance in getting coverage through the Affordable Care Act if the employer can't afford to do this themselves. This is we have found is crucial for essential workers who have been on the front lines, making sure that we are able to go to our grocery stores and purchase groceries. They are making sure that supplies of groceries are reaching our stores. They have come into our homes to provide home health care for those of us who need that. So employers also need to provide benefits like retirement savings plans, and if at all possible, provide matches to the savings so that their employees will not be economically insecure as they get older. And finally, employers should conduct pay equity assessments. Talk about transparency. There needs to be transparency around people getting equitable pay, and preferably this should be done with an external auditor. Women are paid less than white men who are doing comparable work. And the Institute for Women's Policy Research has estimated that if we continue at the current rate of progress, women overall will receive pay equity in 50 years. But for Black women, it will take a century. And for Latinas, it will take 2 centuries.
Yeah, that's it's a tough nut to crack. I think a lot of employers think they have their hearts in the right places, but without those internal audits really sort of scrubbing the data and looking at it very carefully, it's hard to tell, especially with levels. I think that, Maria brought up the notion of levels, that it's challenging for somebody coming in who's historically underpaid, may get stuck in a level. Even if they get promoted and get a raise, they're still not earning what a counterpart who happens to be a white dude would be earning. And this could be, a person of color, man or woman, or, certainly female women of color. So, so I guess my next question is, talking about the wealth gap in particular, with your various organizations. Jon, what are you seeing as something that Even can do to promote more equitable wealth for the workers that are using the platform?
I mean, the name of the company is Even because the whole point of the company is to even the playing field. And man, is the playing field not even. Like, I don't think most people realize this, but Kilolo touched on it a little bit earlier in the webinar. The average white family has roughly $150,000 of household wealth, and the average black family has roughly $25,000 of household wealth. When you eliminate student debt, that number closes significantly from 15x to roughly 5x. So helping folks eliminate their debt is, I would say, the longest lever that you as an employer can pull. Unfortunately, the gap is so wide that it's not the only lever that we need to pull if we want to actually solve the problem. But that's where I would start. It's important to actually understand what kind of debt people have. A lot of it is student loan debt. Unfortunately, a lot of it is student loan debt for degrees which were not even completed. So there's just no value from it. The CARES Act provision, which makes student loan repayment matching tax deductible, was honestly like one of the few silver linings for me in the past 5 months, because if that actually got a lot of employers to match student loan repayments, it would start closing the gap very quickly. This is something that you can do through Even. We're not the only company you can do this through. There's a bunch of point solutions for this. If you're in a position where you just want to focus on that and not have the overall platform, I can recommend some, which I know are doing good work. But I would really focus on debt, understanding what kind of debt people have, student loans, credit cards, the 401k loans, unfortunately, and put focus there.
Suzanne, you mentioned about sort of being a financial counselor for the workers there. So what do you think can close that wealth gap? What is Live Nation doing to help with that?
I really agree with what Jon shared. I had mentioned a little bit earlier this idea of moving upstream. If you can, instead of reacting to an issue that somebody has sorry, I did mention we also react, but instead of building based on reacting, working to make sure there are things or employee, if we maybe are not paying more cash into a paycheck than every other company out there, what can we do to be able to eliminate those bills, but especially, like we mentioned, that debt. So to give that example, I mentioned that we do provide dollars every single month towards employees' student loan debt. That's actually cut off at a certain salary. So we do not make that available above a certain point. So I think we mentioned the word pay equity earlier. It's very specifically called pay equity as opposed to pay equality, because if you just keep giving everything equally, everything just keeps moving unequally together. So what we make sure that we do is we try to pull up what resources we can and have. I mentioned we're in a zero revenue environment. We have not taken on we've taken on employee premiums for medical, but that's only specifically for furloughed employees. It's pretty natural that the employees that we had to furlough, and very specifically furlough and not lay off, when we furloughed them, it was so that we could keep and retain them as active on our health plan. It's not going to be a surprise to anybody that we were not able to furlough all of the presidents at the company. They took dramatic salary cuts, but they need to be there to help rebuild the company. However, they don't need any help with their healthcare costs right now. They don't need any help with programs that we already excluded them from. They're probably paying hundreds, if not $1,000 a month for the same healthcare that somebody else at our company was paying $50 before, and now they're paying $0. So really focusing on equality means to us that, again, I'll use the term moving upstream, to cut off a lot of the things that create and or just create this cycle and hamster wheel of challenges for people. We did job leveling, we did pay equity, or we redid them, I should say, so that we're up on top of it. But I think what we're looking at now is, okay, we keep checking the box in all these areas, and I mentioned we have a diversity and belonging group because our leader there has done such a great job. She's moving past inclusion into having a true sense of belonging, because people do feel like we have a diverse and inclusive workforce, but that doesn't mean we're done. So in the pay equity, job leveling space, we're now moving into living wage. And we actually started this exercise a year or two ago. Instead of looking across the entire spectrum of what people are earning and trying to say, okay, well, let's just tweak these two people and move these two people over here, it's looking at, well, what about all these people down here? If our federal minimum wage is X, $7.25, I think it still is and has been for over a decade, or a little less than a decade, how do we move that up at Live Nation? Because we have control over that, and not just follow guidance and the basics and the bare minimums. I also wanted to speak just one last thing to the idea of, because I mentioned our benefits have equity in them, not equality. We are looking a lot more into the space of, if we are diverse and we do feel like we've checked the boxes a lot of places, living wage is one of the areas that we need to turn and shift focus to, as is really having an honest conversation with ourselves to say, I mentioned all those presidents that have stuck around because they need to rebuild or shift the direction of the company. Everyone knew, it's not a surprise, that a lot of them are white men. So how do we now turn and be transparent with ourselves about, okay, we have a diverse workforce that's relatively representative, but it's definitely, or now we've seen after some analyses, that it's not representative across all of the leadership levels. So we've taken some swift action to really focus on the true compensation for what people's ability to do is, right? So back to this idea of teaching a man to fish. How do you actually make it to where they're truly able to move into a leadership position, which means putting more effort into areas of color, especially Black women, but we have a lot of Indigenous people and Latinx people as well. But, laser pointing and having a effort towards each of those, because I talked at the beginning about that, reinforcing this idea of how we're reducing debt, but then also empowering people in a way that maybe our society has had a hard time with over the past 100, technically 400 plus years, but had an extra hard time with recently. And how do we try to move ourselves out of that and tell a different story?
Maria, talk a little bit more about the transparency and what metrics you're using to measure whether compensation is equitable.
Sure. We look at pay and benefits often, and particularly on the pay side. At the beginning of the year, we ask for a budget for the year, and what we're doing is we're using it differently, right? So, we may not release it all at the beginning of the year. We may hold on to some of it and do these types of things at mid-year to kind of adjust for any kind of inequities that we see. So, certainly this is somewhat of a unique year. So we may or may not do it exactly how we've done it in the past, but I think it's not a one and done. And that's the thing that is really important to kind of drive into leadership's head is you don't fix a problem that's happened over decades in 1 year. Right? You'd never have enough money to do that. But, we do what we can and we're transparent and honest about what we can do and how much we can do. We tell employees, look, this may take a few years to fix. And I think, you know, it's been effective for us so far. And we'll kind of continue with that strategy, because I'd be a liar if I sat here and I said, oh, I can fix it all in 1 year, and I can't. Right? We have to balance business results with what we can do. But what we have made a commitment to do is continue to look at things such as pay, such as benefits. You know, the other thing when we're talking about closing the wealth gap, sometimes, I forget which panelist said it, it may be the result of, you know, someone may be doing a procedure that isn't completely covered under our benefits plan. Right, so we're looking at things, you know, from a claims perspective. What are common things, and should there be a change to our benefits policy? Should we be including things like egg freezing and, you know, some of these other more sexy benefits? And, you know, I talked about earlier on our preparedness strategy, and right now we're sort of like in rapid mode because we're hearing it more frequently from our employees. They're asking for things like, you know, egg freezing. Women are having kids later in life, right? And so we have to meet our employees where they're at, and we also have to be able to have a package that is going to make us attractive for our workforce of the future. So, you know, we're kind of chipping away at it a little bit by a little bit, but we're also taking, you know, it's really important for me as the leader of that function to take credit for the job that we're doing and remind people, hey, we've done this. Hey, you guys said you want a telecommuting policy. We gave you one, right? So I think that's also important to celebrate those wins, especially when they're coming from the voice of the employee. So that's a little bit about what our strategy is.
Marina, talk a little bit about what audits or metrics you have in place to ensure that there's equity in compensation.
Yeah, no, it's a great question. I just first want to follow up on a comment that Maria just made about you know, total rewards professionals, and I think we're all very committed to the concept of pay equity, and in our community there is so much just exchange of ideas and publications, and really it's seen as a best practice for organizations to have a pay equity philosophy, to have specific processes in place to look at pay and ensure consistency. So I'm proud of this and proud to be a part of that community of professionals. The other thing I would say is, again, echo something Maria said, which is having that commitment to pay equity is much more important than thinking that the problem can be fixed overnight. And I think many organizations, especially in the technology sector, if you have seen in the news, have gone out and publicly made those commitments, and I applaud them for that. But there are also other companies in other industries which haven't really made a public statement, but still have processes in place to look at the pay equity. And to me, the other point I want to make is what's much more important than the audits, which are kind of like on the back end, you're going in and you're trying to fix something, is to have frameworks and to have processes on the front end to ensure that pay equity doesn't occur. So this means training, talent acquisition, and recruiters when somebody joins the organization to do the proper analysis and ensure that that individual gets a fair and equitable package for the position they apply for. And then also it means once they're with the organization to have a compensation philosophy that pays for position, that pays for performance, and pays by the market, so that we have equitable pay practices in place. And to me, these are really fundamentals that must be in place, and they're much stronger and more important than kind of going in and fixing things that have happened with an audit.
I just want to pause briefly again, since we're nearly at the top of the hour, and remind you all to send in questions if you have them. And I'm going to turn it over to Nick just for a second.
Hello. Thanks so much to everyone who's participating in Pay with a Shared Purpose today. Thanks again to our sponsor, Even. At this point, Lydia will start answering some of the questions. It looks like we have quite a few already, but please share more and we'll hopefully get through everything. Thanks again, Lydia.
Thank you. So, we're going to open it up to our audience now, and we've already gotten some questions. This one is of particular interest from Jamie, who wants to know, for companies that are restricted in the budget available to make or improve benefit offerings, what's the number one place you would recommend starting or putting those dollars to assist? And honestly, any of you could answer this question, so we may just do a round robin on this one and see what everyone's perspective is.
I don't know if this is really common practice for everybody, so hopefully I'm not saying something everyone is doing on a monthly basis, but checking at what your partners already have that you're not using, right? So anything that any company, it's not blame insurance, but anything that any company could not have to pay out, not have to use, even if it's in a contract, is just better for the bottom line. So what I will say is that it's our responsibility as the leaders within HR, and specifically for me within benefits, to look back at plan assets. So specifically in a health plan or in a 401k plan, those can and should be used for education. We have, if you look at a very specific example, in a pharmacy plan, a lot of those dollars people just kind of reallocate into a clinical program that the same person that's giving the money is already providing. So they're like, oh, here you go, $40,000. And then you turn around and spend the money on programs that really should have always been there for employees. So I know that that can be a hard pill to swallow to then shift it away. But if you've already budgeted for that $40,000 to spend on the clinical programs, then I would just urge this idea of looking to see if you can move that into a one-time, if it's, getting very specific onto, well, we need ignition to be able to have some financial wellness. We did a series at the very beginning of everything. A lot of questions were, I'm really scared about the stock market right now. I don't think I actually understand what I'm supposed to do, right? Maybe that's the one thing when we talk about financial education that people are like, I think I know, but I don't actually know how to do it. So we did an investing 101, and there were people who were at the SVP level, and there were people entry-level positions that were on that series, and we didn't pay $1 for it. And of course, since we were forced to do it via webinar, it didn't even use as much of those credits that we had. But you can also use the actual true dollars from, in our example, our pharmacy PBM, to pay for a completely different partner that does help advance some of the education. So maybe I was just eager to jump in because Live Nation, of course, like I mentioned, has had to be really unique with everything, but some of that was suspending other programs. I would be remiss if I didn't admit what was our reality, was we did have to suspend some programs that we didn't think were actually going to provide as much financial security to people this year. I would challenge, we actually took away our childcare reimbursement because people told us, like, typing in emails like crazy, I'm not going to use this money. Can I use it for something else? So we just completely suspended that program, and then we realized here's our run rate for that program. Let's use that money somewhere else instead of just calling it savings. So I know I mentioned a couple of things in there, but I would definitely look at your current contracts or have your consultant or broker look at places where there already is money or promised hours and resources and start using them pretty immediately.
I would say for employers who are not currently providing benefits, that for essential workers especially, I think paid leave is really important. And if the employer doesn't have within their budget the ability to provide healthcare benefits, then try to help get coverage for those workers through the Affordable Care Act. These employees are on the front lines and they need support.
I have an answer which may be somewhat unexpected, actually, given what my company does. So I mentioned earlier that I've been a designer in my career, and I'm fluent in what is now pretty famous thanks to IDEO, which is a world-renowned design firm, this concept of design thinking. And it's not something which is only applied to like making apps. It's something you can apply to, designing your benefits as well. And design thinking would say that to do anything, to solve any problem, you need to first actually understand what the problem is. And so if you have very limited resources, that might be money, it almost certainly is going to be time. The first place I would suggest putting those resources is in talking to your workforce and understanding what they're actually going through, and not taking exactly what they say as gospel, because part of design thinking is the understanding that your user, or in this case, your employee, is going to tell you the outcome that they want, but they may not actually know how to get there. And it's up to you as the designer to take that outcome and then do more research to figure out how to get there. For example, a lot of times when we've talked to employers and they've done this research, they'll come to us and they'll say, my people are leaving for 15 cents more an hour because people don't have enough money and they want a job that pays more. That's ridiculous. What can I do to solve that problem? The issue is not that they actually want 15 cents more an hour. The issue is that they have this underlying financial insecurity, and there's just few levers that they can pull to get there, and they're going to pull the ones that they can because of how big a problem it is. But the only way that you'd even know to address that problem is if you know it exists in the first place, the financial insecurity problem. There are firms that can help you do this research. There are actually firms that specialize in financial insecurity research, like the Financial Health Network is one that I would recommend. So if you haven't done that research yourself, I would really start there, because every company is different. Your workforce is different. They're going to have different problems. And honestly, as the HR leader, or the benefits leader, it's up to you to actually understand how you can help them the most. And, research is the way to get that.
So I was actually going to say something very similar to what Jon said. It's probably even more elementary than that. I would ask your employees, right? It doesn't even need to be so crazy sophisticated, but if you have a limited budget and you're not sure where to put them in, I would just simply ask them, do a Survey Monkey, something very similar, or something. It could be something very simple, but if you are concerned about how best to utilize the dollars, I would say just ask, right? I know it's very elementary and very, very simplistic, but sometimes the biggest bang for your buck is when you ask.
Marina, do you want to add something to that?
Yes, actually, just as a follow-up on what both Jon and Maria said, in a prior company, I had the opportunity to work on a project that allocated resources, compensation, and benefits dollars in the best way. And it was a process that had 3 phases. And it was exactly kind of what was described by the other panelists. The first thing was understanding employee needs. So rather than asking them, do you want this benefit or that benefit, understanding what's on their mind, what are their needs, and what are the different clusters or segments of employees based on location, type of role, age, etc., generational differences. And then the second phase was, once these needs are understood, to do something called Conjoint Analysis. And some of these tools are available out there. And Conjoint Analysis is a survey where employees are put in an environment where they can trade different compensation and benefit dollars. So for example, they can choose whether they want to get a 10% increase in bonus or a 10% increase in salary, and then see what is the preference. And that project also included design thinking or design concepts where in partnership with an external consultant, the organization went and looked at the needs study, and then the available benefits, and then the outcome of the trade-offs that employees have made, and designed packages that were attractive to them. So there's definitely tools and methods out there to kind of look into, and could be implemented. I think a lot of it could also be implemented at a much cheaper, kind of lower way, using, as Maria said, survey tools like a Survey Monkey, or just a simple focus group approach to get that information. But there is also more complex tools available out there.
Well, hope that very thoroughly answered your question, Jamie. We're going to move on to another one That is, what are some mistakes you see employers make when they start to implement a financial wellness program? What are the biggest pitfalls to avoid? Who wants to take this one first?
I see all sorts of mistakes, so I'm happy to talk about this one. The biggest mistake you can possibly make is not defining success. Most, like financial wellness, let's be real, it doesn't mean anything. So if you want to actually help people, you need to define success in a way which actually means something that you can actually measure. I would recommend using the Financial Health Network's definition or the Consumer Financial Protection Bureau's definition. Those definitions overlap a lot. They're basically the same, which is why I'm confident in either of them. We define it, we're a partner of the Financial Health Network. We actually helped them create that definition. And in practice, we actually recommend a much simpler definition, which is just do people have margin in their cash flow? Are they saving money? It's not the accumulation of savings, because people will use that money to improve their life, like paying down their debt or buying medicine for their kids that they otherwise couldn't afford. But are they capable of saving? That is the sort of high-level definition I would suggest. There are lots of other mistakes, but that's probably like the 80-20 of them. So I would really start there.
Kilolo, do you want to add something to that? I mean, especially with regards to inequity, I can see that mistakes could definitely be made that could perpetuate inequity.
So I think that John touched on this earlier and really spoke about it well. An assumption that employees are less astute than what they actually are in terms of knowing what's needed to stretch their paychecks and so forth. And then if that assumption is made, then the perhaps the wrong kinds of help is offered. So I think also the panel indicating that it's important to ask employees what they know, what they need, and then design the benefits and assistance in response to that is a wise approach. And I think may get at some of the inequities, because then you have a better sense of what is it that some of the employees have not been getting that they needed and should have been getting, that perhaps employees were not aware of, even maybe they should have been, but were not aware of. But by asking, you get this information. It's like doing the pay equity audit. You find out what's actually going on, and then you can be in a position to address it.
I want to do the flip side, which is another question that was asked. Any success stories to report? Can you actually say that employees have ended up in a better situation after intervention? And what are some of the stories you're hearing, positive or negative? So, you know, Marina, Maria, or Suzanne, to take this one, because you've been speaking to employees. What are you hearing in terms of success stories?
I guess when you get the thank you from the employee that they've heard your voice, I think that we've heard their voice. I think that is when you know that whatever it was that you've done has been successful. And generally, especially when you get the thank you from the problem employee or the squeaky wheel employee, or one who has a reputation of never being happy. Right? We all have those disgruntled employees. And when those disgruntled employees start saying thank you for listening, you know that you've done something right.
Looking at defining or what John mentioned as the definition is, can employees save? It's really hard without just asking them how much they have in their bank account, which you can definitely do. But I would say another way to look at that, which has been mentioned a number of times, and I think Live Nation's probably just really proud of this, having gotten into this pretty early, was the student loan debt repayment. You can And you can do the same thing for home mortgage, right? Helping people get lower mortgage interest rates or helping them pay that down quicker. But going back to this investing idea, and compound interest is something that I'm pretty sure everyone could at least describe if they couldn't totally define it, or you know it very well. But a lot of people, I was just talking to a sibling of mine, and she's very, I would say, very financially astute. And she still was even talking about like, oh, I think now that the home prices are coming down in my area, maybe I'll just, jump into home ownership, getting a condo, doing something. And I was like, let's look at your entire situation. And the reason, I guess, to go back to the point of making sure that people are pulling down their debt and doing that directly with a student loan repayment program, and figuring out what your philosophy is, right? Again, our philosophy is that we take care of our own, and we define that in finding the people who need it the most, not in giving it to everybody equally. And so that was super important to us. We don't have any executive benefits. We don't have mentioned that people, even the president, vice president, and SVP level, pay much more than others do, and even healthcare. A lot of those things are with our philosophy. So seeing it in the numbers, the student loan repayment program, when it went within our philosophy, but then it was very clearly a way to see in the dashboard of the partner that we have, and that could be even, it could be another one, the one that we partner with, you can see how many people have paid their student loan off completely. Those also do turn into stories, employees sharing on Facebook and whatnot, places that they weren't even trying to thank us for it. They were just really proud that they were able to do it. And most of those people are people who have loans that are a lot easier for us to help them pay off and remove thousands, if not tens of thousands of dollars of interest that they would have otherwise paid. So I think measuring success in that one is really easy, but I wouldn't take away the value that it brings to have a program like that, not just to be able to measure something, but to be able to very clearly say that you've done something that could drastically impact that person's life.
Marina, did you want to add something to that about success stories that you've seen?
Yes, and I think sometimes success is just making small incremental improvements over a period of time. And the way we look at this is by conducting total reward surveys. So we don't focus on one specific benefit, but on our total package. And when we do the surveys over time and we see that our employees have more and more positive responses to the package based on small enhancements that we're making over time, it really gives you a sense of gratitude, and you understand that we're moving in the right direction. So sometimes it's good to have these consistent questions and consistent methodology to do the survey so that you can see what's the overall trend and progress over a period of time.
That's a good lead into this other question, was very specifically asking how you measure progress towards financial wellness. Do you start with an idea of outcomes? Are there specific KPIs that are generally accepted when addressing this topic? I've not really read anything about KPIs to measure individual employees' financial wellness, but please enlighten me on this one.
So I would recommend the Financial Health Network's framework for this. They have 4 pillars of financial wellness: plan, spend, borrow, and save. This is based on years of research. And it has been validated in the real world with real employers for the past 5 years, as actually helping to move people through the cohorts of financial wellness that they also created, which are people who are vulnerable, people who are coping, and people who are healthy. And if you focus on these 4 pillars, that has been shown through our program, through a few others that the Financial Health Network partners with, to actually move people, especially from vulnerable to coping. So not to be the evangelist for the Financial Health Network, although I am, I would really recommend starting there.
Are there any other metrics that are sort of universally used? Kilolo, have you heard about anything?
Well, there's the coaching approach, which would say that success is when the person who is being coached has defined their goal, what would be success for them, and has determined, has taken the steps to reach that goal and has determined that they feel successful there. So again, it's going back to inquiring of the individual what it is they want, and then that coaching approach would say the work is to assist them in achieving that goal, and they will let you know if they have achieved what they wanted to and feel successful. So that's one approach.
Thank you. So another question about the points that were made about transparency and financial inequity. What is the best way to approach this topic with senior leadership when large discrepancies are uncovered? And this could go across gender and race. Suzanne, you had mentioned about the SVP level and the changes there. How does that get sold to upper management when there is such a vast difference between what people are making?
Yeah, I guess I'll take it in two parts. For pay equity, I would challenge that that's a really easy one to solve, because if you start with job leveling, and then you know that within that definition that this is a manager and this is a manager of this type. I'm being reductive, but they're different. You need to pull this person up and understanding geography and whatnot. Those ones are easier to solve, but the commonality between that one, I think the second one, commonality is data. So the first one, just showing it. It's very easy to say, we are not going to be able to be competitive if we are paying different. People don't know what to expect. I think one that's a little bit more nuanced, and hopefully maybe this is where some of the question came from, was around what's a little bit more pertinent right now when people are trying to realize or have a reckoning about the race inequality in our country specifically, is that one is not always, if the data has been looked at before, then it's not presented to senior leadership as an actual issue, or it wasn't listened to as an issue. So I think taking advantage of this particular moment right now, and especially when I mentioned those senior leaders, that I'll just be very blunt, or probably Lydia, you're referring to the white males, they're being asked right now a lot, and even myself are being asked, well, how do you change it? What do you do? And so I would absolutely take advantage of right now or the next 6 months to say, here are our numbers. And for us, it was, we have good diversity, but not across levels. So very publicly and clearly, our CEO said, we are going to double the number of Black people, very specific again, of Black people in a director and higher role. So if the percentage at director is, only 3%, it's got to be at 6% by 2022. It's a little harder for us to swallow that 2022 because we aren't hiring a single person right now. But mobility internally is a big focus, and then eventually hiring and making sure we're looking at that. So again, that was the commonality of those two things are data. But I think the challenging conversation to have about race and why that's important to increase that. But I think taking advantage of the moment right now could be really important in that discussion.
There's a related question here from someone else, and it says, when a company has serious inequities among their underrepresented employees, what is the best way to bring this subject up when you are part of the HR team? So even going deeper than audits, well, how do you even start the discussion? Who can help with this one?
So within the other part of the work that I do in addition to research at Urban is that I work with the organization to become more diverse, equitable, and inclusive in terms of staffing, the content of the work, and in the audience that we engage with. And one of the mechanisms that we use is to hold listening sessions and to invite people to sign up for a focus group-like session. And we are careful to not have their supervisors or supervisors mixed in with people who are supervisees, so that people feel free to talk, and then to just discuss what are the concerns that they may have, what are the approaches, what are the goals and objectives that they think the organization should be working towards in order to resolve those. So we've done that with across all staff. But we've also held listening sessions with employees of color, and that brought out different kinds of concerns and issues. People talked about what their experiences were working in the organization that was different from what we heard when we were inviting employees across the organization.
And if I can jump in really quickly and just give someone's role, or someone like Kilolo's role, a lot of credit, is, I think, speaking from internally and someone who's in that similar situation, it's, you have to bring in someone who's experienced in this, and these cultural emancipations that are very specific to having groups that need to be heard, but then also bringing larger groups together to hear some of that, all needs to be guided by someone who is really experienced and knows how to really listen, but then give a recommendation back, as opposed to it just being HR responsibility is to do that. And that might be a couple grand, which is extremely valuable dollar spent, because maybe I'm saying a couple grand's not as big a deal for a company as large as Live Nation, but I think even a small company, that's dollars that should be committed to getting that person in for just at least that first session to do it. And that will allow people to not make assumptions and instead have it brought out in a way that's actually actionable.
And just to follow up on the actionable piece, I think that's really important. We didn't just hold the listening sessions and say, wow, it's good to hear how you feel. That information was translated into a roadmap, a 5-year diversity, equity, and inclusion roadmap for the organization to make changes and to assign and to specify what the goals were, what the objectives were, the activities around each of the objectives in order to achieve them, and the time frame, and then accountability, who's responsible for each one of those activities. And then we monitored that over time.
We have a question that referred back to part of the discussion that was at the very top of the hour with us about the tools for educating and what type of financial education is beneficial. As HR leaders who are living in times where we cannot afford additional offerings and we don't have the bandwidth to consult each employee individually, how can we help?
Your 401k plan partner, maybe I'm echoing what I mentioned earlier, but your 401k plan partner's got a lot of hours in your contract. Doing webinars broad-based across the company might help. There are also, if you happen to have, maybe this is just a very specific plug for anybody who happens to be involved in some voluntary benefits. So whether it be critical illness and accident or legal assistance, a lot of those companies really need to make a voice for themselves in employee benefit plans, because they aren't the 1,000-pound gorilla like a healthcare plan is. And they oftentimes have a lot of resources, and especially right now in a time of COVID, are offering free consultations, so just connecting employees with them, or holding sessions. So we've done a lot of those and haven't spent any extra money because it was already in our contract, or it was something that they were offering up to promote themselves, but without any strings attached because of what's going on right now.
Yeah, and I can just echo that. I think the 401k providers typically have a number of different resources available, and what we are seeing that there's more actually that they even offer as a complimentary consultation to employees that we may not have utilized in the past, but in times when financial resources are limited to the organization, those are good options to tap and offer to everyone. Working with the vendors and seeing what they can do. I have seen just also in general, a lot of companies do things, complimentary seminars and just do things for free, even before they become a vendor. just as an opportunity to also, market their products, but part of it is educational. So I think finding those that are, no strings attached and bring value could also be very beneficial.
I was just going to echo what the other two panelists have shared. I'm really tapping into the vendors, right? You'll notice, and we'll pick on 401k for a second, but even the 401k vendors, they have targeted education, education just toward women, just toward certain workforces. So they are very, it's more often than not, you're already paying for it and you're not using it. So that's one of the things that, helped us kind of accelerate our preparedness strategy. The other thing I would say is partner with if you are fortunate enough to have a dedicated learning and development team, I would say start partnering with them. Because, we're an organization that puts a lot of focus on training and training hours. And so we've been partnering a lot with them to say, how do we get our employees to do more training, especially now we're starting to see spikes and they're looking for content, right? So a lot of times you can kind of send your L&D team to, your 401k vendor and let them sort of work it out amongst themselves. But there's probably a lot of free stuff that you have available to yourself that you're already paying for that you're not utilizing.
At risk of ending the panel on a little bit of drama, if I may, I do want to echo a point that Kilolo made very early in the discussion today, which is something I agree with, which is that those financial education products that 401k vendors traditionally offer have been consistently shown in independent academic research to have very little effect on actually achieving outcomes. And the reason why is that if you want to actually help someone learn to fish, it is very difficult to learn to fish in a classroom. Like, people can do it, and you'll get edge cases of people who are really, they're just like, I really want to learn how to fish. I'm going to study the crap out of this, and they will learn. But most people will not be successful learning how to fish in a classroom. They need to be in the river with the rod in their hand. So what I would have a little bit of a controversial dissenting opinion, which is that there are actually a lot of new vendors which you could bring on, which have business models which don't require you, the employer, to pay anything, but that do actually have products which are much more like getting people in the river and putting the rod in their hand. Some of the 401k providers actually are starting to offer new products like this as well. So I would encourage you to look at your 401k provider. You might have, might get unlucky and they happen to be the one that is doing this stuff. But most are not. So I would consider doing an RFP or something like that, just to see what's out there. It doesn't cost you anything other than time.
Don't worry, John, that's not too dramatic, because the other line of thinking that I was going to say that's a lot less direct, but I won't take up too much time saying it because we're at the end, but look at the source of a lot of people's problems. One major source that's data supports, I mean, I don't even have to say data supports it, but our healthcare, right? All majority of bankruptcies in the US are directly related to healthcare spend. So you can make a small adjustment there where maybe you will need to spend some money and invest in financial wellness, but if you can create dollars, again, this idea of if you've already budgeted something, especially if you have a self-funded plan, if you can drive more efficient spending and show that you have pulled down your spend by 0.5%, 1% over a year or two, then you're creating dollars elsewhere. And I would definitely ride the wave of the non-reckoning pandemic and move more towards the COVID-19 pandemic. I would be remiss if I wasted this time to not do something positive. And one of the things I'm focusing on right now is there's a Mayo Clinic study that's saying a lot of primary care visits, 50% of them can be moved virtual. I think it was University of Utah. University of Utah did a study on maternity. They took women that were childbearing and cut their visits in their 9 months, 38 weeks in half, and moved the other half, it's not that they didn't have care, they moved them to virtual, and they saw no significant or even statistically significant, difference in the health of the mother and the baby. So making some swift changes to save employees and the health plan a lot of money is not only saving people money, which is a direct assistance to that, but back to the question, which was, how do you help when you don't have a lot of money? How do you help employees from the direct financial wellness or financial education and security? Being able to move those dollars to an investment in something like what John was referring to, I think could be found by reducing that 1,000-pound gorilla, reducing the spend there a little bit, frees up just that, $20,000, $50,000 you might need pretty easily to be able to spend elsewhere.
Well, we still had some more questions, but we're going to have to end there. So thank you all for a lively discussion filled with information. Back to Nick.
Thanks so much. Thank you, Lydia. Thanks to all of the great speakers. It was a great conversation with a dramatic ending. Thanks again to Even and to all of you for participating today. If you'd like to join us for more virtual events, you can head to our website, fromdayone.co. That's FROMDAYONE.co, and check out more of our upcoming webinars. We also have our first virtual conference. It's a full slate of schedules, including panels, keynote discussions, and fireside chats on July 22nd. More information about that is on our website. Next week, on July 14th, we have a webinar, The Future of Benefits in an Evolving Workplace. And on Thursday, July 16th, we have The Future of Apprenticeships in a Remote Learning Era. And the following week, July 22nd, as mentioned, is our half-day conference. And July 23rd is a webinar on employee recognition, more important than ever. Thanks again for participating today. Much appreciate your attention and your time to spend with us today. Thanks again, and this is From Day One. We'll see you next time.